All right, Bitcoin rebounding on the back of the Fed decision this week, now trading back above 67,000. Now, the cryptocurrency has certainly been on a wild ride, to say the least, since the approval of spot Bitcoin ETFs earlier this year. And it's also taken many other crypto-related stocks along for the ride. But as Bitcoin halving comes into view, could the crypto landscape be set for a new state of mind? We want to bring in Mark Palmer. He is Benchmark Senior Research Analyst. Mark, it's great to have you here. So we certainly have seen the seesaw action play out over the last several weeks. Not necessarily anything new when we're talking about the price of Bitcoin, but as we look ahead to the halving, what do you think the pricing activity is going to look like?
Yes, well, thanks for having me. Good to talk to you. What we are seeing right now is not unusual if you take a step back and look at the history of the halving as an event. What we saw in two previous halvings, which occurred in 2016 and 2020, is that there were significant retracements in price ahead of that event. In 2016, it was close to 40%. In 2020, it was more around 20%. Which is essentially what we've seen in the 2024 cycle. You know, what's going on here? I think it's a couple of things. One is the uncertainty ahead of the halving. When, for those who don't know, the Bitcoin halving is when the rewards that are paid to miners for each block that they mine are cut in half. So the profitability of the miners is cut in half, and hence a lot of miners tend to leave the market. It's almost like a wildfire that cleans out the Bitcoin mining space. That means that the amount of computational power or hash rate associated with Bitcoin mining goes down around the world. You end up seeing a lot of volatility around that event. But again, what's important from our perspective is what has happened historically after the halving. In 2016, we saw that volatility ahead of the halving. Then the price of Bitcoin went up 6x. In 2016, it was 17x actually. In 2020, it was 6x. The point being that we typically see an extended rally after the halving that goes on for something around 18 months.
Mark, to what extent does the ETFs and the inflows that we've seen, and now more recently, I guess some of the outflows from ETFs in recent days here, that event and that introduction into the market in itself, what does that introduce in terms of some of the perhaps atypical activity that might take place, given that Bitcoin is hitting all-time highs before the halving, and then you've got the ETFs, both of those things not happening before?
Yeah, that's a really good point, because the halving itself is a supply shock. You know, the supply of new Bitcoin introduced into the market declines each time that we have a halving. What we are seeing this go round is also a demand shock with the introduction of 10 spot Bitcoin ETFs, all of the inflows that are associated with that. Why is that different? Because Bitcoin from its beginnings has been a retail instrument. It's the rare asset class where retail has led, institutions have really lagged behind. Now we're positioned to see more of a catch up on the institutional front. We're certainly seeing that in terms of the uptick. And yes, it is extending into the stocks that are associated with Bitcoin. You know, a couple of the ones that we cover, MicroStrategy and BitDeer, which is one of the Bitcoin miners. You know, we've seen significant pickup in both of those, which in some cases, MicroStrategy, you know, is reflected in a premium to the underlying holdings of Bitcoin that it has. So we're going to see some volatility around all of this as we head into what is really a colossal event for the space.
You know, Mark, while we are talking about it here, you mentioned MicroStrategy, and I'm curious because MicroStrategy's CEO, Chairman, I believe, Michael Saylor, was on Yahoo Finance last week. He was talking to Julie Hyman, and she was asking him just about the end game here for MicroStrategy as the company continues to buy more and more Bitcoin. I'm curious how you're evaluating that as an analyst. So not so much the short-term story here for MicroStrategy, but what you think that long-term reaction and pricing action could look like.
Yeah, you know, you aren't going to find a stock that is going to be as correlated to the price of Bitcoin as MicroStrategy is. As I mentioned, you know, the stock is, and it has in the past, been trading at a premium to the company's underlying Bitcoin holdings. I think what you see now is an opportunity for MicroStrategy to extend its reach beyond just holding Bitcoin, which is and will continue to be its core. But the management team and Michael Saylor, the executive chairman, have said that they really want to be a Bitcoin development company. People forget that Bitcoin is not just a cryptocurrency, it's also an underlying blockchain, and that there is significant building that is going on that blockchain. That is something that MicroStrategy is looking to get into, leveraging what had been the core of MicroStrategy from its founding over 30 years ago, which is its enterprise software business. So there's more to MicroStrategy than simply acquiring Bitcoin. That is the core of what the company is. It's the core of our valuation, and we do believe that MicroStrategy is very well positioned. We are assuming that the price of Bitcoin reaches 125,000 by the end of 2025. MicroStrategy will be among the beneficiaries of that upsurge.
And Mark, we got to go. Is MicroStrategy the company right now that is best positioned in terms of the managed blockchain solutions that are anticipated to be introduced to the market here?
It's actually newer to the game as it pertains to those. There are a lot of private companies that are developing or have been developing solutions, particularly on the infrastructure front.
Yeah.
But what's exciting is the fact that MicroStrategy clearly has the expertise. They have the network. They have the ability to add this component of their business.
Right.
And I think that that's going to be important in the longer term.
Mark Palmer, always a pleasure to get some of your time. Thanks so much for taking the time here with us on Yahoo Finance. Benchmark Senior Research Analyst Mark Palmer. Good to see you.